Okay, once again, welcome everybody. Tonight we have Zahava Schechter, who is an attorney on Long Island who deals with estate planning. So she's going to give us a presentation on basic estate planning. If you have questions, feel free to type them in the chat and we will get to them at the end of the presentation, or alternately at the end of the presentation, you can unmute yourself and we can have questions then. So Zahava, please go right ahead.
Thank you so much. Good evening, everyone. Thank you to Christy and to the Bayville Public Library for inviting me to speak to you on this very important program on estate planning. So we'll get started. I'm going to share my screen. Hopefully you can see it. Can everyone see my screen if I go up or down? Let's see.
I see just fine.
Can you see going up and down different?
Yes.
Great, excellent. Okay, so this is me, Zahava Schechter, and as Christy said, if you have a question, please feel free to put in the chat box, or you can contact me afterwards. I also have a lot of information on my YouTube channel and my website, so if you have a question and you're not sure where to go, that may be a good place for you to go to get your answers. I'm an attorney with more than 30 years of experience. I'm just going to tell you briefly about myself and why I'm presenting here. And I handle cases involving estate planning, that is preparing for incapacity and certainly for death, because we all die, as well as handling administration after people die, helping family members to pick up the pieces and some litigation when they don't get along, as well as doing real estate conveyances and some business law. And if you like to listen to podcasts, my podcast is free, the LI Law podcast, on Apple or Google or wherever you get your podcasts. And it's only about Long Island issues involving the law. So if you like to listen to podcasts, you might enjoy. Okay, before we start, I just want to, I put out this information for everyone. If you're unfamiliar with this office, the New York State Office of Unclaimed Funds, you could look for your name, for your family's names, and see if there is money which a financial institution is holding for your benefit or a family member's benefit, which has been unclaimed. After a number of years, it is cheats. It goes over to New York State. I usually find money for clients, whether they've passed and I'm handling the estate, or for clients who are alive still, hopefully. And so if you haven't looked at this website, it is definitely a good website to check out. Okay, so tonight we're talking about estate planning. There are 3 basic documents. Now, I don't want you to think that we're going to cover everything for estate planning tonight. I don't have that kind of time, but we are going to we're going to talk about some basic documents, and there are 3. Healthcare proxy, durable power of attorney, and last will and testament. And those are the 3 we're going to focus on. And I like to start with a little bit of levity. I hope you don't mind. Mr. Frosty, it's March. He's going to be melting soon. Time to talk estate planning. So when is the right time to plan your estate? And here I should take a step back and say, let's talk about what an estate is. To say the estate of Zahava Schechter is not correct, because I'm alive. An estate means that someone has died. So when you do estate planning, that means you're planning for what happens later on. And the best time to do planning is when you're well, and you don't really need to do the planning, because if you wait until there is an intervening event or you lose mental capacity, at any time tonight I talk about capacity, it's not physical, it's mental that we're talking about, the ability to understand who you are, who your family members are, what you want to do, where you live, etc. So if you lose capacity, it's already too late to do planning. So we're going to start with the healthcare proxy, and the healthcare proxy and the power of attorney are the 2 documents that are valid only while you are alive. What does that mean? When you die, they are no longer valid. We'll talk about the power of attorney later. And the healthcare proxy only applies to health decisions if you're able to make your own decision, unless you're not able to make your own decision. So what do I mean by that? If Christy comes to me and I'm a doctor, or a medical professional, Christy comes to me and she knows today who she is, what she wants. She wants to go to Northwell. She doesn't want that procedure. She doesn't want that medication. She does like that doctor. It doesn't matter what her spouse says, what her friend says, what her adult children say, or even what the doctors say. She has the right as an adult, meaning over the age 18 or over, she has the right to be in full control of her healthcare decisions. But what happens if Christy loses that ability? Again, mental issue, cannot understand what is being said to her, cannot communicate her wishes. If she doesn't have a healthcare proxy, no one can make decisions for her, and the doctor in the hospital will make those decisions. So what are some things involved in the healthcare proxy? The HIPAA release of information, because once you're over the age of 18, no one is entitled to know what your healthcare decisions are. Instructions to agent, normally do not resuscitate or keep alive. We'll talk about that more in a moment. Are you an organ donor? Do you want to donate organs? Burial or cremation instructions, and selection of agents. So I provided to Christy, and I believe she gave everyone a handout. If not, you can go along with me on this sheet, but the handout is not legally binding. It is not intended to be your healthcare proxy. It's just a worksheet for you to think about some of these issues. So the first thing is, who is your agent? This is really important. Number one, it's got to be someone who agrees to do it. So sometimes people come to me and say, oh, I want to name Christy. I'm sorry, Christy, I keep picking on you. But then I ask, well, did you speak with Christy? Does Christy agree? Because maybe Christy doesn't feel comfortable doing that. Maybe she doesn't want to make the decisions. Or let's say you do not want to be resuscitated, which means if the doctors say that you have no chance of being mentally competent and of being able to function as a human being, if you are not on a respirator, maybe somebody else would say, especially someone who's religious, might say, no, we're going to keep, that person alive as long as possible. It's not for us to make those decisions. So it's very important whom you choose. And you also need a backup. We'll talk about that in a minute. So here's some factors to consider. Proximity. Does that person live near you? It doesn't have to be in Bayville, but somewhere on Long Island, somewhere in the New York area. Does that person have to fly in from California or deal only with emails and not really know what's going on? Age and health of candidates. So it used to be that I would say to people, especially if they were older, I would say, try to find someone younger. After COVID, age is certainly not a predictor of health, or of a longevity. But I would just say to you, think about the health and the age of your candidate. Can that person cope with these decisions? Again, we're talking life or death decision making. So this should be someone who is emotionally stable and can make those decisions. So it's very important to have at least one successor agent. And I want to go back for a second to what I said, who is your agent? Sometimes people say, I've got 3 children and they're all going to decide, we're going to make them co-agents. And I say to them, that is the worst decision because, forgive me for saying, even if they're all 3 great, they may not agree. And they may all not be available. So if you say A and B and C all have to agree, they all have to be available, they all have to make this decision at the same time, that's a lot of pressure. So I normally suggest you name one person as your agent, then you name a successor, that's 1 and 1, and then you name an alternate, because you never know, people are not available, they're out of town, they are sick, they die, whatever the case may be. When you make this document, yes, you're making it for today, but you're also making it for next year and for the year after that, et cetera. The time to review these documents is when you have a change of life event. Somebody you name dies, or someone's born, or someone turns of age, meaning 18 or over, or there's a marriage or a divorce, or you fall out, or whatever the case may be. So you're not just making it for today. Try to think ahead. What are your end of life wishes? Do you want to be resuscitated? Do you want to be kept alive on the respirator? I just want to say New York State does not have a right to die law, meaning it's not legal to pull the plug. The problem is not really the plug. It's in the beginning, plugging someone in. Because if someone dies before you plug that person into the respirator, then God has taken that person, right? But if you pull out the plug and that person would not be alive but for that machine, then you have a problem. So there are lots of moral, ethical issues here. And I encourage you, if you're thinking about doing this, to consider what you want. Do you want to make, I could talk about this a long time, but I want to move on. Do you want to make an anatomical gift? Are you an organ donor? Some people are, some aren't. There's no judgment, whatever you want. Do you have any pre-planning? So I'm a big proponent of pre-planning. What is that? New York State has a program. It runs through the New York State Department of Insurance, whereby you go to the funeral home, you pre-plan, you pay for the casket, or if you want cremation, whatever it is you want. You have your plot or don't have a plot. It's all taken care of so that when you do die, your next of kin or your agent or whomever it is makes one phone call to a funeral home and it's all taken care of. I will tell you personally, I did that with my mother. And when she passed, it was a difficult time. And I was so grateful that all I had to do was one call. I didn't have to think about money. I didn't have to think about anything. It was all taken care of in advance. It's a great program. So I suggest you look into it if you're thinking about it. Do you have specific instructions to provide to your agents? I've had really interesting specific instructions from clients. Maybe you want, if you're Catholic, you want a certain song during the mass. Maybe you want a certain church. Maybe you want your ashes, if you want to be cremated, you want your ashes sprinkled somewhere in particular. All kinds of people have plans. This is the time to make your plans, your wishes known. All right, we're going to move on to the durable power of attorney. This was revised last year, June 13th, 2021. A lot of people ask me, what if I have a power of attorney from before then? Well, if your attorney is still in practice and that attorney will give you a letter, an opinion letter saying that that law, that power of attorney under the prior law or even years before that is still a good, meaning it conforms to the June 13th, 2021 law, then you should be okay. However, I'm telling you from what I see, my experience with my clients, that banks generally are not honoring prior POAs. I've suggested to my clients that they come in, make a new power of attorney. It doesn't cost that much. And frankly, it preserves your ability to have your finances and matters handled for you. So I want to talk a minute about the difference between the power of attorney and the healthcare proxy, because they're two different things. If the healthcare proxy deals with healthcare decisions, end of life, et cetera, the power of attorney deals with all financial matters, IRS, New York State Department of Taxation, Social Security, selling your house, bank accounts, financial, cold stuff. So who do you want to name as an agent there? Somebody who's good with money, someone who's organized, someone who can deal with an accountant, with a lawyer, who can deal with bank statements. I mean, you don't want someone who is not so good with Excel or with some other kind of program, whether QuickBooks, whatever program somebody uses. So make sure it's somebody who can handle financial matters and also is willing to do so. In New York State, unlike the healthcare proxy where you could name Christy and Christy doesn't know anything about it, and then if you're not well, Christy's called and she says, I never agreed. It doesn't work that way with the power of attorney. As you see from my slide, the agent must accept, the agent has to sign, because what happened was people were named, like Christy's named as an agent under the power of attorney. And then when Christy is contacted and she says, no, I'm not interested, there was no one to handle the affair. So New York State said, no, we're not doing that. You must agree. And one other difference between the power of attorney and the healthcare proxy is the healthcare proxy. Do you remember I said, if you're fine today, you still make your own decisions until you are not fine. It doesn't work that way with the power of attorney. With the power of attorney, the moment you sign it, it's already in effect. So it's a dangerous document, a wonderful document, wonderful, very important document, but it's dangerous. You hold it in your fire safe. We're going to talk about a fire safe in a minute. And the last thing I just want to say is, you notice it's called a durable power of attorney. That's because today, if you're mentally well, no matter what happens tomorrow or next year, whatever, if you're, God forbid, in an accident, in a coma, what Alzheimer's, whatever it is, it's still good. The fact that you are later not in possession of faculties does not affect the validity of a document you sign, you execute, when you do have your faculties. Okay, I know I'm going quickly, but just trying to give you an idea. Now, those two documents, healthcare proxy and power of attorney, are good while you're alive. Now we're going to go to what happens after you die. So that's called the last will and testament. The reason we call it last is you can make a will today, tomorrow, the next day. They could all be valid, but only one is enforceable, and that's the last one. So that's why until you die, that document has no effect, none, because you could change it at any time until you die. So someone could say, oh, I'm a beneficiary under my mother's will. Well, no, you're not until mom dies and that will is probated, meaning the court accepts that will. So there's a lot to that's in my next program. I don't know if you're aware, I'm doing a follow-up program, what happens after someone dies and how you handle that. I believe it's August 30th. So if you're interested, that's the second part of this program. But in any case, here again, the agent under the healthcare proxy or power of attorney, that person is called a fiduciary, person who does things for someone else. Here with the will, it's called, that person's called the executor. You may also, if you know people in Florida, I have a matter I'm handling now for someone in Florida. In Florida, for example, they're called personal representatives, but here in New York, we call them executors. There are all kinds of bequests. If you want to leave money for a charity, you want to leave your grandmother's diamond ring to someone, there are all kinds of ability, things you can do, or you can just say, I'm splitting it between my children. However you want it to be, it should reflect your wishes. And it's very important that you can understand your will, that you read your will. I have people come to me, especially they're redoing a will, and they tell me, I don't even understand what's in here. And I say, it's your obligation to read your will to make sure it's correct. And it's very important to me. I review every will, every draft will with my clients. It's very important that you understand, because it's not important what the attorney thinks or what the attorney says. What's important is what you want, that your wishes are upheld. So anyway, all right, I won't talk about guardianship now if you have minor children. We're going to talk a little bit about trust later, but I just want to say in the will, if you create a trust, that's called a testamentary trust. You see, it says last will and testament. Anything with the word testament means it's coming through the will. And that's as opposed to an inter vivos trust, which is a trust during your lifetime. And I'm going to talk with that later, because a lot of people are coming to me saying, I want a revocable trust, or I want a trust. And what can we do? And we're going to talk about that a little bit later. First, we're going to get to some miscellaneous matters that are I think very important. The first is, if you have a bank safe deposit box, may I suggest you close it? Because whether you hold the box with someone else, even if it's a spouse, if one of you dies or if you die, the bank will no longer allow anyone in until someone is appointed through the courts to be executor. It's better to have a fire safe box in your home. I regularly recommend to my clients a certain box is about $50, whether on Amazon or on Walmart, and it's delivered to your home. It's not expensive, not heavy, and you keep it in your bedroom or wherever you want. And it's not for theft. So if you have, diamonds or whatever, and you want to keep that in the safe deposit box, okay, I understand that. This is not for theft. This is for your documents. And again, it's just for fire safety. So if you don't know what I'm talking about and you want me to send you the links, I'm happy to do so. You can email me later. Okay, I want to talk about insurance for a minute. Long-term care insurance, before we get to the others, long-term care insurance, I am a big proponent. I don't sell it. I've had it more than 20 years. So if you don't know what long-term care insurance is, I want to talk for a minute. We're going to go into Medicaid in a moment. I want to talk for a minute. Oops. Okay, we're going not fast enough. Between Medicare and Medicaid. I want to first explain that, and then we'll go back to long-term care insurance. So Medicare is age-based. You can be Bill Gates, billions of dollars, and be over 65, and you still get Medicare. It's age. As long as you're 65 and older, you qualify for Medicare. All right. Medicaid is dollar-based. So you could be 1 day old and qualify for Medicaid. Medicaid is for poor people. We're going to talk about that in a moment. For poor people. It is not for people who have lots of money. And actually, I'll talk about that more in the next program, August 30th. So a lot of people say, all right, well, if I can't do things for myself, it's called activities of daily living, toileting, showering, eating, dressing, cooking, stuff we all do every day. If I can't do that, all right, Medicare will pay for that. No, Medicare doesn't pay for that. That's why you need long-term care insurance. Now, the younger you are and the healthier you are, the less your premium is going to be. It's an annual premium. Well, at least I guess you could pay it monthly as well, but generally it's an annual premium. And it is a great thing to do. So people say, well, it's expensive. What happens if you never use it? And I say, I hope to God I never need it, right? I want to die fully, with my faculties and physically well and everything, and be good and never make a claim. But if you need it, it's a drop in the bucket for what you would spend. What do I mean by that? If you need to go into assisted living or into a nursing home, that's more than $10,000 a month. So, some are 5,000, but I mean, you're talking big bucks here. So long-term care insurance is a way for you to either get assistance in the house, whether with a home health care aide, et cetera, or in a nursing home facility, not to be a burden on your family. I'm sorry to put it that way, but that's how I look at it, being a burden. They have to give up. I know I have lots of clients like this. They have to give up their jobs, or they're home all the time because someone has Alzheimer's and cannot be left alone, and they can't afford, they don't have long-term care insurance. They can't afford to have a home health care aide come in every day. There are a lot of issues like that. So if you're well, and if you're, I don't know, 60 or under or whatever in that range, certainly if you're under, I got it in my 30s. I strongly suggest you look into long-term care insurance. If you have questions on that, I'm happy to help. I don't sell it, but I'm a big proponent. Life insurance. There are many kinds of life insurance. Term life insurance is the only one I recommend. And that is because whole and universal are very expensive, and they have a forced savings component to it. So what is the purpose of life insurance? If it's to take care of someone, a dependent, in case you die or you can't work anymore, then term life insurance is the way to go, whether 10 years, 20 years, et cetera, fairly inexpensive and a good thing. If you could afford disability insurance, that's also good. We're running out of time, so I'm going to move on. Medicaid. I just want to say I get a lot of calls from people. They have money in the bank. They have houses. They want the money to go to their children and have Medicaid pay for their care. Okay, Medicaid, if you have assets more than $15,000, and if you have income of more than $859 a month, you're not going to qualify for Medicaid. I mean, we'll talk about this more at the next program, but just be aware, if you want to do planning, there's a 5-year look back period during which Medicaid can say, wait a minute, you purposely conveyed property, or you transferred property so that you would qualify for this government entitlement program. So just be aware, there is no panacea. Also, when you do that kind of planning, you totally lose control. So when people say to me, oh, I want to do this planning so I qualify for Medicaid, I say, great, you're not going to own your house anymore or any of your bank accounts. They say, what are you talking about? No, you won't own anything, because if you own it, then it belongs to you and you're not going to qualify. So sorry, I'm going quickly. Gifting. I just want to say you can give anyone up to $16,000 a year. So if you are married, then that's $32,000 a year. That is income to the recipient, but that's a good way of, then that's without tax to you. Although again, that is income to the recipient. If you leave this program with nothing else, I hope you're listening right now. The best advice I can give you, and it's free and only you can do it, is tomorrow, call every bank, brokerage, insurance company, et cetera, and check your beneficiary designations. Almost everyone I know, I say clients, they come in, oh, I know, I already have my primary and contingent beneficiaries listed. Really? Go check. And they come back to me and say, you know what? I didn't have it. Let me tell you what happens when you have an account, a bank account. I have a bank account. I name Christy as my beneficiary. I die. It's called transfer on death or payable on death, TOD, POD. I die. Christy brings in my death certificate and her ID, and she gets the money on the spot. There's no probate. There's no other problem. It's a great thing. Please go check all of your beneficiary designations have both primary, meaning the person who gets if they're alive, or the people who get the class, and then contingent. Please do that. Right now, I'm doing a prenuptial agreement. It's actually not for a second marriage or beyond. I do a lot of those. It's for a first marriage where there's a disparity. I represent the husband as the incoming husband, the groom, and there's a disparity between the groom and the bride. And so we're working that out. You know what's really great about doing prenups, if you're thinking of getting married or you have an adult child getting married, when you remove the money issues, the financial issues, there's nothing to fight about. So it's a really good thing to do, especially for second and later marriages where each of you has children and you have assets from that are separate property, et cetera. Just a good thing to do. Deed transfers, a lot of people say, I want to transfer my house to my child, but do you realize there are tax consequences for that? So be very careful before you do any of these things. Okay, I want to talk about trusts because a lot of people have been coming to me and saying, I want a trust. Why? My neighbor has a trust. My uncle has a trust. That's not a real good reason. Actually, I want to talk about the good reasons to have a trust, and then we'll come back. It's all about the control. A trust is about you controlling, you setting up the parameters for who gets, when they get, how much they get, etc. So here are some good reasons to have a trust. Governmental assistance. You have a beneficiary who is either getting Medicaid or has disabilities, and maybe that person would be thrown off the rolls and not get the government entitlement anymore if that person were to inherit. Because when you inherit money, then the government says you don't need the public money anymore. Medicaid planning, again, you lose total control there. Spendthrift, do you have a beneficiary, a child or a spouse or someone who they have $2 in their pocket and they spend it immediately, and you think if I leave them more money, they're not going to pace themselves? I see that a lot. Addiction, whether opioids or illegal drugs or alcohol or any other kind of addiction, people who are not in control of themselves, so you want to pace them, you can control when they get. Ease of administration. I have a client right now who's doing this. She has properties in different areas, and she doesn't want to have to do what's called ancillary probate in all of these areas. So everything is going to be owned by the trust, which is an entity. If you think of it as like an empty vessel, and you put things into the trust, you transfer assets, and then it's just easier to handle. So I just want to talk about what a trust is. A trust is not the answer to everything. It is only as good as your planning, meaning if you create this trust and then you put nothing in it, not a house, not a bank, nothing's in it, it's empty, it's useless and a total waste of money. So the question of whether you create a trust is the first question. Then are you going to do it during your lifetime or do it through the will? And then is it going to be revocable that you retain the control, or is it irrevocable for Medicaid purposes? Again, beyond the scope of this discussion. Okay, you choose someone wisely. May you be the grantor, the person who creates the trust, the trustee, the fiduciary who has control over the money, and the beneficiary, yes. But then it is a revocable trust. You will not qualify for Medicaid. So you see, it's not like there's one answer for every situation. We're almost done. 2 quotations by Benjamin Franklin. In this world, nothing can be said to be certain except death and taxes. We're all going to die and pay taxes. So why not do it on your terms? By failing to prepare, you are preparing to fail. So if you have a question, please let me know. And I want to thank you for your time and attention, and stay well. And let me stop the share.
Okay, and I'm going to stop the recording and then we can take some questions.
I don't see any in the chat. Does anyone have any questions?